Hi, this is Lara at Elliott Wave Stock Market with your daily analysis for the S&P 500 for the trading session dated Wednesday, 21st of November. I'm recording this video now, 6:15 in the evening New York time on Wednesday the 21st New York time. Here is our daily chart for the S&P. We've had a trend change here, probably at primary degree, which means primary C should unfold over the next few months. These targets remain the same, they're still months away. Within our new downwards movement, we have minute or pink 1, expanded flat for 2, and we're still within a third wave. Within the third wave, we're still within the middle of it. We still need wave 5 orange to complete wave 3 green. I have two hourly wave counts for you. The first one looking at the reasonable probability that wave 4 orange is now complete in 3 sessions, in counterpart to wave 2 orange, which lasted 6 sessions. This is entirely possible, and it's slightly more likely than the second wave count. Let's have a look at Wednesday's movement on the hourly chart, where the low for 3 and the high for 2. It's a slowdown here and this high up here. So for our first hourly wave count, I've redrawn this channel now using Elliott's second technique. If wave 4 orange is a single zigzag structure, which is now complete, and it's overshot the previously drawn channel, then we redraw the channel from 2 to 4 with a copy on the low of 3. And we'd expect wave 5 to either end most likely midway in that channel or to find support at the lower edge. So far we have now a nice clear 5 up. When I look at this movement on the 5-minute chart, it subdivides perfectly into a 5-wave impulse. There are only 2 structural possibilities for a C wave within a zigzag. It has to be either an ending diagonal or an impulse, and this one subdivides to an impulse. So we have a 5 expanded flat for 3 and a 5 up complete. We have a complete zigzag structure. We have perfect alternation between wave 4 orange, a zigzag slightly over 50% the length of 3, so a relatively deep correction, compared to wave 2 orange, a flat correction, and slightly less than 50% the length of 1, so a relatively shallow correction. That's one of the reasons why I think it's more likely that our correction is over a little quicker than expected. It may be over now. When we use Elliott's technique around this zigzag to draw a channel from the start of A to the end of B with a copy on the high of A but push it out a bit further, wave C has ended just below the channel, but importantly the channel is breached by the last 3 or 4 hours, very slow movement. It's not a really convincing breach though, and there's not enough downwards movement right at the end of Wednesday's session to tell me that wave C purple is definitely over. The 5th wave within it certainly could extend a little higher. So if we see any movement in the next session or so below 1386.39, that's the low of the 4th wave within C purple, that would indicate that its 5th wave is over, which would indicate the C wave should be over, which would indicate that the 4th wave would very likely be over. So we have a little bit more confidence below that point. At 1335, wave 5 orange would reach equality in length with wave 1, which you can see on the daily chart. But a word of caution about this target: there's already a really good Fibonacci ratio between waves 1 and 3 orange within this impulse of 3 green, so I wouldn't necessarily expect to see a ratio between the 5th wave and either the 1st or 3rd, and I'll be using the ratios 1 degree lower at purple degree within the 5th wave to give us a more accurate target. So this target will probably change. While I can't be certain that this upwards movement is over, that the final 5th wave is not going to extend any higher, I'll have to leave the invalidation point at 1407.56. If the next session does see any more upwards movement, it can't move above the invalidation point for the wave count to remain valid. But if it does move any higher, I really wouldn't expect it to be by much. It looks pretty likely that it's over now. Alternatively, if we move the degree of labelling within this zigzag structure, or down 1 degree, then we have the scenario that wave 4 orange could be continuing further as a double zigzag or a double combination. There are 3 reasons why I think this alternate has a lower probability than the main wave count. For the main wave count, if the zigzag's over here, it's only lasted 3 sessions, that's a Fibonacci number, and zigzags usually are more brief than flat corrections or doubles or combinations, so that would all actually look really typical. Also, if the alternate unfolds and we continue for several more sessions as a double combination or a double zigzag, then we're going to have a really huge overshoot of this channel drawn using Elliott's first technique. Doesn't invalidate the wave count, just reduces the probability that we're going to see such an enormous overshoot. And the final reason why I think this alternate has a lower probability is wave 4, if it's over here, already is over 50% the length of wave 3. It's achieved alternation not just in structure but also in depth, so that all looks really typical. If this alternate is correct, we'd also be expecting downwards movement, but it would be an X wave, which has to subdivide into a 3. For our main wave count, the downwards movement expected is a 5th wave, which has to subdivide into a 5. So only careful attention to the structure of the downwards movement, the subdivisions within it, is going to tell us which of the wave counts is correct. Unfortunately, X waves can make new price extremes beyond the start of the first structure. That's not extremely common, but it certainly wouldn't breach any rules for Elliott waves, so I can't give you a downwards invalidation point. We have to pay very close attention to the structure. I am expecting over the next session or 2 or 3, generally trending downwards movement, starting off with low momentum, gathering in momentum as we move towards a low degree 3rd wave. I expect we've had an earlier than expected end to our small 4th wave correction, and now we're in the start of a final 5th wave. That's all for me today with your S&P analysis, and I hope that members are all looking forward to a fabulous Thanksgiving. So happy Thanksgiving, everyone.